Inflation in the United States is at a 40-year high. We are literally watching the official numbers creep in on 8%. The unofficial number is likely in the double digits. The average American is in a worse, dire financial position than they literally were just a year ago. And so ultimately, the Federal Reserve, they had to do something. And yesterday, they decided they were going to raise interest rates by 25 basis points. That is the equivalent of bringing a water gun to an actual inflation war. This is going to have almost no impact. What do I mean? Well, we can see the interest rates themselves have been coming down for quite a while. If we go ahead and we look at this chart, since 1980 or so, we have watched interest rates continue to fall only one way. Back in 2015, 2016, we tried to raise the rates again, but obviously had to go ahead and drop them aggressively when the pandemic hit. And so if you look on the far right, you can see a little blip. That's the interest rates raise that they've gone after. 25 basis point increase in the interest rate is not going to do a thing when it comes to inflation. In fact, the inflation in March is likely to be higher than what the inflation reading was for February. And so ultimately, the Fed is going to have to decide, what are they going to do moving forward? How much fortitude do they have in terms of continuing to do this exact activity? Well, we've got a quote here from Jerome Powell, the Federal Reserve Chairman. And what he says is that we are attentive to the risks of further upward pressure on inflation and inflation expectations. The committee is determined to take the measures necessary to restore price stability. The U.S. economy is very strong and well positioned to handle tighter monetary policy. So ultimately, he remains committed. He is going to use that tight monetary policy to address inflation and try to get the economy into a place that is better for the average American. We also can see here with the FOMC statement that in addition to the committee expects to begin reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities at a coming meeting. So it's not just the manipulation of the interest rate upwards as one of the tools to go ahead and address inflation. They also are going to take a number of other measures. And the big question right now across financial markets, the question that people are waging trillions and trillions of dollars on, can the Federal Reserve get inflation under control and have some sort of soft landing so that they avoid pushing us into a recession? I can't tell the future, but what I know is that that's going to be a really tough task for them to accomplish. Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.